Hello class, and welcome to this video where we are going to go through this handout, and this is just like a question on your homework assignment. And we're going to walk you through three things here. The purpose of this is to, one, create a job cost sheet. Okay, that is what we're going to use as a manufacturing company to determine our three product costs. We'll put them all on there, our materials, our labor, and our overhead. We'll get a total job cost. Then we can divide by the units produced in order to get a cost per unit so we know where to set our prices. Second thing we're going to do is we are going to put all of these into a journal entry. This is the only chapter in managerial accounting where we have to deal with journal entries, but the purpose of this is to show you how the cost flow through the system and through the different inventories, through the raw materials inventory, the work in progress inventory, and the finished goods inventory. And the final thing we're going to do is we're just going to post them into T accounts just as a quick refresher. So when you have some questions that ask you what is the ending balance of this specific inventory account, you'll be able to find it. So you should attach with this video in your Canvas page. You should have this handout that has Almarinda Company. So let's start up here. First thing we're going to do is right up here at the top. It's going to say, we purchased 60,000 units of raw materials at $12 per unit. That is the first transaction we have to deal with here. So I went ahead and filled everything out, and as I explain it, you'll just see there's nothing being put into production here. So I don't have to do anything on my job cost sheet. For this particular thing, all we need to do is put it into our journal entry. So here we see on April 6th, we are going to debit our raw materials count. When we buy materials, that is inventory. Inventory is a normal debit balance. So we debit our raw materials and it's set on account. So we will credit accounts payable. That is for 720,000. That was the units times the price. And at the same time here you're going to see my job cost sheets on the left-hand side of the screen. On the right-hand side, you can see my inventory accounts. I put that 720,000 into my raw materials inventory right there. So that takes care of that. Why? There we go. So next, we have on April 21st, raw materials were requisitioned. Okay, that requisition, that means that they were requested by the production department from the warehouse. So we need to take them from the warehouse down to our work floor and start putting them into production. Anytime we put anything into production, we need to put it onto our job cost sheet. Okay, so we had 25,000 units for job 50 at $10 per unit and 27,000 units for job 51 at $12 per unit. So the first thing I do is I'm going to go to my job cost sheet. So for job 50, this is my job cost sheet up here. It says job 50. We have a spot for direct materials, direct labor, and overhead. Remember, we had 25,000 units here at $10 per unit for job 50. That's $250,000 onto the job cost sheet. 27,000 units at $12 per unit onto job 51. That was the information given to us. So now we have that on our job cost sheet. The next thing to do is to journalize that. So I add those two numbers together that I put on each of the job cost sheet, and I get 574,000. That is going to be my number. I am not going to debit my work in process inventory. Once I put anything into production, anytime I put something onto that job cost sheet, it is going to go into my WIP, my work in process or work in progress inventory. In this case, it was materials. So it is coming out of my raw materials inventory. That is why I credit that amount. And again, the 574,000 was the amount that I put into job 50 and the amount that I put into job 51 added together. So that takes care of that top question. Now I move down here to the second one. We're going to be dealing with direct labor. All right. So the question tells us that we have 20,000 hours of direct labor on job 50 incurred at a rate of $20 per hour and 24,000 hours on job 51 with a rate of $22 per hour. So since this is a production cost, a product cost, whenever we have those costs incurred, right, first thing we need to do is put them onto our job cost sheet. So the direct labor for job 50 is at 20,000 hours times the $20 given in the problem. For job 51, it is 24,000 hours multiplied by the $22 per hour to get our direct labor for each one of those. That is on our job cost sheet now. Now we can add those together. We get 928,000. Right? Oh, switching back and forth on these screens is driving me crazy. There, this is the journal entry on 430. Whenever we put it on the job cost sheet, remember, it goes into production, it goes into our work and process inventory. That is what I have debited there. We credit our wages payable. And again, that is the amount added together. And also remember, every time I've put it into these accounts, I've done the correct thing by posting them over into my T accounts as I move along to keep my correct balances. Next, we're going to come down here. During April, Almarinda Company incurred factory overhead costs. So this little section here is talking about actual costs. Okay, remember, we are doing normal costing in this chapter, which means that when we go onto our job cost sheet, we are doing actual materials, actual labor, but we are doing estimated or applied overhead, not actual overhead. So the actual costs here are not going to go onto our job cost sheet. Instead, all we need to do is make a journal entry for them. So for the actual costs, we are going to debit an account called manufacturing overhead. Now, this is basically a holding account. We're going to put all the actual costs into this account. And then you're going to see, if you see the journal entry right below it, that's for the applied overhead. When we apply the overhead, we are going to take it out of that account. Okay, and then that difference, once we have the difference between what we put in there and what we've taken out, the actual and the applied, that gives us our variance, right? That we have to adjust the cost of goods sold at the end of the period. That's where we get our over applied or under applied overhead from, is this MOH, manufacturing overhead holding account. But for our actual costs, we will debit the manufacturing overhead. Then we have to credit what they were. All right, so we had some indirect materials. Those come out of our raw materials inventory account. We had some utilities. Those are utilities payable. We had some indirect labor. So again, we have wages payable there, just like we did when we had our direct labor. And then finally, we had depreciation. And if you remember back to accounting one, when we recorded depreciation expense, our correlating credit account there was accumulated depreciation, and that stays the same here. We no longer have the expense, right? Because it's becoming part of inventory, but we still credit our accumulated depreciation. So to reiterate, on April 30th, starting with the manufacturing overhead through this, these are our actual overhead costs. So that will take care of that line. Next to the bottom here, here's where we are going to apply overhead. Okay. The first thing that we need to do is find our predetermined overhead rate. We find our predetermined overhead rate by taking our estimated overhead, 1.75 million, divided by our estimated base of 500,000. I've done that here. You can see, so our predetermined overhead rate, the 1.75 million divided by the 500,000 estimated labor hours, gets us $3.50 per labor hour. Now we need to apply it. When we apply it, that means we put it onto our job cost sheet. Okay, and remember, it was on the basis of labor hours. So when we get to job 50, you got to look up back on your worksheet to part number 2, right? For our direct labor, it told us that we use 20,000 hours. So that's what we need. We need 20,000 hours multiple, because that was our actual base usage, multiplied by our predetermined overhead rate that we just calculated at $3.50. So 20,000 times $3.50 gets us $70,000 manufacturing overhead for job 50. Use the same rate of $3.50, only job 51, remember, use 24,000 hours of direct labor to get a manufacturing overhead of 84,000. We add those together and we get 154,000. That is the amount that we need to put into our general journal. Okay, that happens here on the 30th, the applied manufacturing overhead. Remember, when we put it on the job cost sheet, Therefore, it's going into that WIP inventory, that work in progress of 154,000. Notice that whenever I put it in here, right? So now I have manufacturing overhead of 202,000. That was our actual costs. We applied 154,000, so we were $48,000 off, and we applied less than the actual cost. So we had some under applied overhead here. We're not gonna have to journal it in this class or for this particular question, but remember, class, that when we have under applied overhead, we have to add it to our cost of goods sold. It increases our cost of goods sold and decreases our profit. Finally, it says that jobs 50 and 51 were completed for the period. So we add up the cost here between the materials, the labor, and the overhead to get a total cost. Divide by how many units it said we produced. For job 50 example, it was 23,040. We get a per unit cost of $31.25. We add up job 51, we get a total cost of 936,000 divided by the given 26,000 units produced, gives us $36 per unit. And the last thing we need to do is we just need to make the journal entry since we finished this, right? Our total cost of 936 plus the 720,000 is 1,656,000. And that is the number we are going to put into our final inventory of finished goods here. And we are going to credit the WIP, the work in progress inventory, because it is no longer there. It has been completed. Now we have it in our finished goods inventory and we are ready to sell that product. Whenever we go to sell that product, then it moves out of the finished goods inventory and gets expensed at this point in time as cost of goods sold. And then finally, you can just go through and figure up your account balances. Your work in process at this point should be zero because we have completed everything that we started. There's nothing there. Our raw materials is 104,000 and we have 1.656 million in our finished goods inventory. So just to kind of reiterate what happened here, right? Let me go back to this. When we have at the top, right? We have materials, we purchase materials, it goes into our raw materials inventory. When we requisition materials, it moves out of raw materials, it goes into the work in process. When we add labor cost, it goes into the work in process. When we apply overhead, it goes into the work in process. When we do actual overhead, it just goes into the holding manufacturing overhead account. It gets reconciled with our applied overhead to give us our over applied or under applied overhead, which we will eventually adjust out to cost of goods sold. But so now we have our three costs in there. We have our actual materials in WIP. We have our actual labor gets put into WIP, our applied overhead gets put into WIP. And once it's finished, we move it out of the work in process into finished goods inventory, where it eventually be expensed as cost of goods sold when it is sold. And that is how costs flow through a manufacturing inventory system and the proper way to work through one of these problems where you have to make a job cost sheet and the journal entries. So hopefully that'll help you with your homework. And for those of you that are watching this for an in-class, that'll help you with your in-class assignment where you have to do one that is similar to this. Good luck.